Hello, and welcome to CMS Forex News. Today is Monday, March 10th. Japanese core machinery orders, an indicator used to measure corporate spending, rose 19.6% in January from a month earlier. The report handily beat forecasts of a smaller increase after it posted a decline in December. China and other emerging economies have provided a demand that is bolstering the Japanese economy in the face of a crumbling U.S. economy. The news helped to underpin yen's strength today. The yen has been gaining as U.S. equities suffered through a very rough patch, which continued today. The dollar-yen pair is near its 8-year low around 101.40. On Friday, the greenback recovered slightly in what amounted to a bout of position squaring. But as the poor performance in equities continued on Monday, the yen continued to gain. After the Sunday open yesterday, the pair slid another 90 pips to continue the prevailing downward trend. Pressure on financial companies played into risk aversion, causing pairs used in carry trade to fall in favor of the funding currencies, the yen and Swiss franc. Unwinding of carry trade was apparent during the New York trading session. The pound-Swiss franc pair, a popular carry trade pair, slid 150 pips after a minor boost to the sterling in UK trading. The pound-yen saw similar declines. The pound was boosted briefly by UK producer inflation data. Data showed that input prices for manufacturers continued to soar. Annual prices were up 19.4%, the fastest pace since statistics began in 1986. For the month, input prices were down to 1.7% from January. Output prices in February rose 5.7% on the year, matching the 16-year high set in January. Prices were expected to rise even higher. After climbing to a new high following the PPI data, the pound-dollar pair reversed and fell below the 2.01 level. This amounted to a 100-pip change during New York trading. Other currencies such as the euro, the New Zealand dollar, and the Australian dollar have also been pairing or stalling their gains against the greenback after a month-long surge. In Canada, housing starts for February rose to an annual rate of 257,000. The rate was higher than expected and was fueled by increased condominium sales. However, the Canada Mortgage and Housing Corporation, which furnishes the releases, said that the trend in housing starts will decrease gradually between now and the end of 2008. The Canadian dollar felt a pressure from the slowing U.S. economy. As 80% of its exports go to its southern neighbor, the Canadian economy has most likely chance of being dragged down with the U.S. The U.S. dollar-Canadian dollar pair gained 125 pips in favor of the greenback, making it a 250-pip swing since Friday's low. The UK will release several indicators overnight. We get the RICS House Price Balance, the BRC Retail Sales Monitor, and the NIESR GDP estimate. This is followed overnight by business sentiment readings from Germany and the Eurozone. The ZEW reports have been an important indicator recently, as they have shown that German economy recovering some of its confidence. Tomorrow morning, Canada will post its new housing price index, and both Canada and the US will reveal the trade balance data for January. And that's it for this Monday edition of our broadcast here at CMSFX.com. Thank you for joining us, and happy trading.